Morning, it's Harvey Jackson. Just going to get through some news items. The wheat market is actually uh, there's some 2 week forecast is showing some storms going across the U.S., but still looks like it's going to be missing some of the bigger production areas of the winter wheat growing area, and that's given the wheat market a little bit of oomph or a little bit of strength yet. And it's just at the time where it's starting to wake up, and it needs that first little shot of water to probably spur it on to get going. Wheat rebounds on lower exports. I think we talked about that a little bit last week. So there is um, a tightening or expected to export less from Russia as well. The other key feature that I've been paying attention to is ice cover. Somebody like myself over in Manitoba pays attention to this because the sooner the Great Lakes get clear of ice and you can get through them to get to Thunder Bay, the sooner the boats can uh, get out of here and start seeing the export program on how it get that east movement, and whether there's going to be a whole rash of canola and wheat movement. It's yet to be determined, but I think there's some pent up demand there now, especially with the differential that we're seeing in canola and stuff like that from European rapeseed and our price. Um, Managed money has dropped off the corn, so it's unwound out of positions. I got this from Bill here. Unwound out about 73,000 contracts, but it's actually taking some of the short positions out of wheat and soybeans as well. So it actually went long. And we know that with the charts as well. The charts have been telling us that it's been doing this kind of stuff as well. Brazil farmers are now at about 66 or two-thirds of their harvest done. Last year was only at 62 about, and the significance of this is when they get going a little bit, harvest a little bit faster. There's a fair bit of beans coming to the market, and that puts pressure on all oil seeds at the moment. So in the futures focus report, there was no big changes in trade positions or any, but what I am paying attention to is just this pace that we're seeing on crush utilization. We're still at 90 and a half, but we've got 7.7 million plus crushed, which is good because it was only 6.6 last year. But just understanding that there's going to be maybe a bit of a slowdown as they need to find other destinations, and that could be in flux for quite some time. You might see a shift going into more exports. StatsCan numbers are in this document, who we're exporting to, and the differential of rapeseed as well, uh, and just the amount that China's bought there. Custom data shows that Chinese canola imports quadruple in January versus December, but we'll have to see if there's even more as this market keeps moving forward. Canola still down, rapeseed down even more. Down a couple of bucks on the canola, down 450, 350. Soybean oil is up just slightly. Palm oil is down a little bit, eight or close to 90 ringgits. Crude oil is up again, and all the wheats are up, and the Canadian dollar is slightly up. We'll just have a look at the charts here. Keep having to move my retracements down. This has been just a bloodbath down, and not sure where it's going to go, but I think there's some more downside yet. I think we have it pegged in that there could be another uh, 550 and then 540. When I look at this chart, we're still not down to full retracement on the November contract, and not to say that that would be a buy, but it would be looking to me as maybe a buy down there at that level. Oh yeah, so here we are. Yeah, we're looking at 550 and then 540 every $10. There's a resistance point here, so and we've been a free fall for quite some time, so we need something to maybe stop us there. Here's your European rapeseed. It's basically in a free fall as well, uh, but falling maybe faster, and that's why you can see that we are sitting at $167 now differential. So European rapeseed is $167 more expensive than Canadian canola on the front month, and that's why I've been paying attention to the export or the ice and how quick those icebreakers can get into the Great Lakes to be able to start moving that product. That's probably been purchased but not showing on the books because the Canadian system doesn't show uh, orders pending either. Just a more history looking at this market. So this is where we are now, and you see we don't get into that kind of territory very often. Soybean oil, a couple little bit of green candles, still it doesn't have a whole lot of strength here as of yet. We probably need to get a few more days of that, and then I can see if there's actually going to be a recovery on there, and that would actually help the canola as well. Uh, the support that you're seeing from palm oil is still pretty strong, and soybean themselves, a little bit of a looks like a little bit of a recovery here, but pretty hard to say that this is a buy as of right now. Canadian dollar. We're at the bottom end of that channel right now, so or in the middle of that channel, so it's not here nor there. I'm not sure which way this market is going to go yet. I don't have any confidence in it. I think there's, if anything, the policies are going to try to drive this market down. Wheat, this is where all the strength is. It doesn't look like a very strengthy chart, but this is the perfect kind of trend that you need to understand, especially when you get these short-term moving averages starting to turn up, which is perfect. You see that probably on every one of these. This is your December contract, still looking at that $7 mark to be able to hit as a target. Hard red wheat. This is the one that's been even more strength than Minneapolis, of course, because this is the one that's leading it. And you can see new crop here. The November or December contract is, you've got a nice long candle with that news of the weather situation there as well. Here's Chicago, not quite the length that we see in the other two complexes, but it's there. And milling wheat is just looking like it's starting to recover, so it's a bit of a follower on the North American market. Corn, still in an uptrend. Not strong signals to buy, but still with the positions that we have, I think we still hold on to those for sure. And that's all I have for you today.